So a lot of people think top-down analysis is about predicting the market when in reality, it's really about eliminating bad trades before you get to your execution time frame. In today's video, guys, we're going to do some top-down analysis together. I'll show you how I do my top-down analysis, and hopefully you could pick up a few nuggets as well. If you were doing it wrong or if you like the way I'm doing it, you can add that to your repertoire. Let's get into the charts. All right, guys, so I'm currently on the gold chart right now, and we're going to do some top-down analysis together. And there's a couple of things that I'll mention that are important for you to know as you're going through this. So first of all, we want to go to the higher time frames, working from the top and going to work our way down, hence top-down analysis. Let's start with the daily time frame. Now, you may ask as I'm going through this, why do I start with the daily time frame? Why not the weekly? Why not the monthly, etc.? Now, it matters to me that I focus on data that actually is very, very applicable to me being as close as possible to executing a trade for today. So meaning it's not that the monthly time frame doesn't matter, it's not necessarily that the weekly time frame doesn't matter, but I'm not really focused on them because I'm really an intraday trader and I'm trying to see if I could find a move within the day. If I was more of a position trader and I'm looking for a move that I want to hold for a week, couple weeks, even a couple months, then I would say the monthly and the weekly time frame could come into play and be more significant in my strategy. But because I'm more of an intraday, I'm going to use my highest time frame to be the daily time frame, right? So we're on the daily time frame, and it's important that I don't just start marking away, right? I need to understand, number one, what's actually relevant to what I'm trying to do, trying to find a trade for the day or trying to find a trade in the near future. And number two, what I also want to do is be able to mark off key zones that are going to be very important, that played a role and were very significant, and that could come back and play another role in the future. So putting that together on the daily time frame, I want to mark off areas of support and resistance in terms of more recent price, right? I don't want to go all the way, I don't need to go all the way back and start marking off zones. I need to focus on probably the last couple weeks and start marking off those zones and see how significant they become, right? So we'll start with here, being that we're on the daily time frame. We start with this area right over here, okay? I think this area is probably the most relevant, and I may even pull this area since it will be significant, and I'll show you why, okay? So coming from this area all the way across, we see that there was a very significant area of resistance. In other words, price got up to this area and struggled to keep going beyond this area, right? And had a massive drop after coming from this area. So that's significant, but why it's really applicable to my top-down analysis is because this particular area, I could already see that it has become an area that has come back and become significant in more recent price. Check this out. I'm going to draw an area of resistance from here, the area we're talking about, and I'm going to drag it all the way across, and look how significant this area became. This area of resistance eventually became an area of support for price. Price did come down a little bit further, but pretty much this area became very significant and was an area that price respected. Okay, this is why it's important to drag those areas across sometimes, because they do become significant in the future. Okay, so I want to find more and more areas that were significant, drag them all the way across. Sometimes they may even go through some candles, and that's okay, because I want to try to find out where these areas could be significant again in the future. So I'm going to draw another area of resistance as I see over here. Price came up here and it had a big drop, so I'm going to drag this across through the candles, and we have that as well. And now finally, the other thing I want to do is mark off the highest place price had reached, or in other words, the all-time high. All right, and we did get to that all-time high rather recently. I want to mark that off as an area of resistance, as the most recent area of resistance so far. Okay, now that I've done that, I've identified all the areas of interest on the daily time frame. I'm going to go down to the 4-hour time frame to see a little bit more information. As you go down time frame, you get more information because obviously the candles are going to be much more, being that you are on a lower time frame. One daily candle, in other words, is equal to 6 4-hour candles. much more data as you can imagine. All right, guys, so now I'm on a 4-hour time frame, and what I really want to do is just continue this momentum. And really, when it comes to the daily and the 4-hour, I'm really looking at the market environment when it comes to these time frames. These time frames are high time frames. I'm not necessarily going to execute based on them, but it really gives me a picture of the market environment, whether the market is trending, whether we seem to be in a bit of a choppy market, right? It gives me a sense of where the market is going or what the market is currently doing. So I'm going to continue again, marking off those areas of support and resistance on this time frame. So I have a area of support here. Okay, and even though the wick came down past this area, it's okay because I don't necessarily see the body of the candle coming down. So I think this is still a respected area of support. And then this area over here became a small area of resistance. Okay, this area over here became a very small area of resistance. Okay, so that was significant. Also, if you could take a look here, this area, even though it was a bit smaller than the previous area, did the same thing. We had a little bit of support down here, and right up until the candle that actually broke out, we had a little bit of resistance as well. Okay, and I'll show you how that becomes significant and how that fits into the strategy. Okay, now we're going to go down to the 1-hour time frame and continue on with our top-down analysis. Okay, so now we're on our 1-hour time frame, and now what I want to start seeing is taking a good look at those smaller areas of support and resistance. Okay, so far this was the most significant one, especially because we had a nice squeeze, and really what we eventually want to do is box price in. Okay, because we are looking to see where our momentum is coming from. So from this time frame, I'm going to take a peek and I'm going to look, are there any other areas of significance that I should be marking off, any other areas that I like, and we're going to review this particular trade that we would have taken. This is why we would have taken this trade. Being that we have our BC30 strategy, we're now going to go down to the 30-minute time frame, and we are going to take a look here at this particular setup. This setup was a very good setup based on the strategy because we box priced in, we have an area of support, we have an area of resistance, and we also have a break. Okay, that break came from the candle that broke past the area of resistance right here, and the body of the candle closed above that as well. Okay, that's very significant. In my previous videos, I talk about that a lot. Very important that the body of the candle, not just the wick comes up here, but the body of the candle closes above the area of resistance, being that we're talking about a buy. Okay, now the next thing you want to do then is you want to enter on the next candle as it's going past the breaking candle. Again, the breaking candle is over here. And as the next candle starts going past the breaking candle, if it starts going past the breaking candle, you want to enter just like that. Now, you may ask, where does your stop loss go? Sometimes it's dependent. In a particular area like this where I don't have too bad of a distance between the bottom of the support, I don't mind having my stop loss right there at the bottom of the support right there so that I can have a pretty decent structural stop loss. Now, when it comes to a TP, sometimes what I do is I'd go to a higher time frame and I'd want to look on the left side to see where is the next structure that price could possibly go to. But in this instance, there wasn't much to compare price to. Why? Because this was actually an all-time high that we were forming. When we came out of here, when we came out of this particular area, we formed the all-time high. So there was really nothing to compare price to. In that particular case, what I do is I take caution. I'd probably go for like 100 pips, so you could say 10 points or whatever, right? Because I'd want to be more on the cautious side because I'm entering uncharted territory, being that it's an all-time high. So you take what you can, or if you want to let it ride, it'll be a good idea to take partials and let a position ride out and see how far it goes. In this particular case, if you did let this trade ride out, you would have made a significant amount of money, just because this trade continued to go on and on and on and on all the way till it got to the most recent area of resistance. Okay, so this is how you want to utilize top-down analysis. The whole point of it is not necessarily to just predict and say, hey, this is my bias, at least when it comes to my strategy. The whole point of it is to eliminate a lot of the fluff and get you to that point of interest where you can see an A+ setup and say, hey, this is my setup. I think I need to dig in a little deeper into this and then eventually execute. All right, so let's go through another example. And in this example, I want to show you a no trade example. All right. So in this particular case, we had a pretty decent consolidation area. Okay. And we were able to box price in. Ideally, what we want to do next is then set our alerts both above and below the area of consolidation, because we are looking for where the price is going to break. Okay. Now, price broke over here first. Okay. Price broke over here first. But if you recall what I've been saying, we don't consider a wick a real break, right? It'll hit your alert and you should pay attention to it. But because the body of the candle, because we're waiting for the candle to close, because the body of the candle did not close below the area of support, I'm not going to consider that an actual break, and I'm not going to take that trade. Now, the next part of this is that we had a break to the upside not too long after. However, I also did not take this trade. Why? Because if you look at this candle, this breaking candle, it was quite a significant candle. And I don't necessarily recall if this was news or anything like that, but this breaking candle, this candle over here, was quite a significant candle. And because this candle broke out so significantly, it did not leave a lot of room for me to follow up with that continuation. You see, when the market gives you this much in one candle, you do have a decision to make based on prior experience. Based on my prior experience, the market has already given quite a bit. So for me to think I'm going to enter on another candle and be able to ride this out even further, it gets a little risky. It removes, in my opinion, this setup from being an A+ setup to more like a B setup. And because of that, I'd rather probably not take it. Now, again, this is BC30, right? We did have the break and close on the 30-minute time frame out of the area of consolidation. However, look how I'm pulling data from my experiences as well to determine whether this is still an A+ setup or does something feel a little off. You do have to revert back to those things that you learn along the way, because those are things that just won't be written in a strategy, right? These are things that you experience over time as you're in the markets. All right, so guys, so when you're doing your top-down analysis, it's very important that you have clear rules on how you're doing it and what you are looking for, what you are doing on each time frame, right? What you're looking for on each time frame, where is your execution time frame, etc. All of these things matter. You need to have all of these things in your trading plan. Also, let me remind you also, you see how you didn't see any trend lines in my top-down analysis? I took those out some time ago. Why? Because to be honest, it wasn't serving me well. Honestly, what I realized some time ago when it came to trend lines is that if you need the perfect line in order for your trade to work, you're probably not in a high quality setup. I've realized that many times when using trend lines, sometimes because the line was a little off or should have been a little further up, or maybe perspective has me drawing a timeline this way when somebody else would draw it that way. In other words, trend lines didn't give me enough room for other things that price might do. It might break through a trend line, but come right back over and respect the trend line all over again. But because it broke the trend line and you consider a trend line break, you're going to use that in some way to enter a trade. Whereas when I'm using zones, I need significant momentum to break out of a zone, and it seems to be more of a clear indication that price is going somewhere. So honestly, you make the decision on what's best for you, but this is what's best for me when it comes to executing this the right way. I realize this is a lot cleaner, a lot clearer, and a lot more profitable. So I hope you guys gained from this video. I hope you guys got some nuggets when it comes to top-down analysis. I hope you could fix your top-down analysis if it's struggling. And most of all, no matter how you're doing it, make sure it's clear what you are doing on every single time frame and what those time frames are for. All right, guys. So let's continue learning. Let's continue the momentum, and let's stay profitable. Until next time, guys.